Good evening. My name is Peter Reznicek from ShadowTrader.net, and this is another edition of the ShadowTrader Video Weekly for Sunday, December 20th, 2020. How to make money in your sleep. We'd all like to do that, wouldn't we? That's obviously a great thing to be able to do. And that's what this trade I'm about to show you does. Although, little disclaimer, I should have titled the video How to Make Money While You Eat Dinner, because it actually happened a lot quicker than I thought. Let me explain. The trade I'm going to show you in this particular video is one that I did earlier this week, and it is a very specific market profile trade. It's called the poor high trade, could also be the poor low trade, and it doesn't come up that often, maybe 2 to 3 times a month, but when it does, you really have to do the trade if and when it happens, because the odds of it working out are very, very strong. Now, the trade that I took, which I will show you in detail, was not a very large trade in terms of P&L because it didn't move as much as I expected, and the total gain on the trade was about $1,000, but it was $1,000 that was made without me looking at the trade at all, just putting it on at a certain time of day and just letting it run, putting in the limit orders to close it, and it just did what it was going to do. All right. The video that I'm about to show you is actually pre-recorded from earlier this week. As I've been alluding to in a lot of these videos, I have a pro trading room software where I do live presentations with my weekly option subscribers and also for the time spreads, subscribers. And this was a private webinar that we did earlier in the week after this trade had wrapped up, where I dissected the entire trade and showed everybody exactly how it was done, when to enter it, when to get out of it. All the mechanics of the trade are pretty much laid out. All right. So I hope you enjoy that and you can put it to use in your own trading. All right. Beyond that, check out the coupon code down below. This is important. We have our holiday sale going on at ShadowTrader.net, which is good until the end of the year, until 12/31 midnight. Coupon code SUCCESS 2021. That'll get you 15% off everything at ShadowTrader.net except for James Dalton, Window Trader, and any of the options advisories. But all of the one-time stuff, not the recurring stuff, such as Think Scripts, Trading Psychology Series, Forex Trading Strategies, etc., all that stuff is 15% off until the end of the year. Again, just put the coupon code that you see down below in when you check out, Success 2021. All right. Without further ado, I give you the video from earlier this week, live recorded in our pro trading room on the poor high, poor low trade. Now, is this also going to be another situation like yesterday where you may be able to pull off the short the futures at the close trade? And I had a lot of questions about this, and I want to talk about that so everybody understands what I meant by yesterday's after hours alerts, and right when we were closing, pointing this out. So if you recall, if you saw from the photo snapshots that I provided, I was short futures at 36.85 on the close. And if you looked at the time stamps, that I did, just refresh the room if you're having any sound issues, just refresh. So anyway, the entry point for that trade is always as close to 415 as possible. And I did it with, it was literally like 4:14:51 with 9 seconds to go, because you want to have the entry that is as close as possible to where this red triangle, or rectangle, I failed geometry, is going to print, because you know that print is the settlement. Okay. So yeah, I'm getting to that. So there is really no stop on this trade. Not really. Not really, because the way this trade works is that there are certain setups that, to me, have such high probability that you'll at least get something out of it, that you have to just put it on and go for it. And a lot of people, when they emailed me about this, they used the term heat. Does everybody know what heat is? Beyond a fantastic film, kind of an LA noir bank robbery type thing, which was the first time that Al Pacino and De Niro, I think, were in the same scene together, right? When they met at the coffee shop. But that's not the heat we're talking about. We're talking about heat like when you enter a futures trade or a day trade. Like, perfect example of heat is the heat that I took today in shop, right? And I showed you my P&L where when all was said and done, I made $300, but that wasn't my, certainly was not my plan. My plan was to make $3,000. But the reason I only made $300 is why? Is because I took heat. I had to take a lot of heat because I was wrong about the pullback, correct? As to where shop would pull back to. I was wrong, and it's fine now, but I thought that it would stop right here at the 1146. And you can see here, when it fell back down, it didn't stop at 1146. It fell down to 1136. So that's exactly what it means by taking heat. So I'm long like 800 shares by the time I get to the low here, and I'm taking a lot of heat. I'm down, I don't know, $6,000 at that point. Something like that. Some decent sized material amount. And then I, buy some more here as close to the low as possible to kind of average down and end up getting out on this move back here just over break even, because by this time I'm a little bit nervous. And I kind of I've seen this movie before, that a lot of times you get this action where if the second move doesn't go all the way to the all-time high, it'll fail again and consolidate some more. And that's what we got. So this is the concept of taking heat. And I'm purposely spending a little bit of time on this so that you understand that the overnight futures trade doesn't actually have any heat. And I'll explain to you why. Because it is not a trade that you are putting on actively and watching and sitting there overnight and watching to see where you're going to exit. That's not what you're doing. What you're doing in this trade is you're essentially betting on this phenomenon to occur. Okay? How often, think about this for a second. How often do you have 100% net long overnight inventory, especially after a giant expansion of range, not to mention a giant expansion of range that has some single prints, so you know that there's some emotion, right? You know that there's some silly goose momentum traders that just, are slapping the buy button and buying at market here, because that's what the single prints tell us. How often does this translate into an overnight inventory that's 100% net long? Almost never. Almost never. It just doesn't happen that way. So all you're doing with this trade is you're expecting that some portion of overnight activity is going to be below the settlement because you shorted right at the settlement. Now, technically, you could make this gamble every single night, and you probably be right more times than not. And some nights you'll make 20 points. Some nights you'll make 30 points, right? And then you'll have that night where it's overnight inventory 100% net long, and you'll probably put a stop like $10 above, because that's all the pain you'll want to take, and you'll be out for a $10 loss. So that's okay, but I don't play that way because I think that's kind of silly. That's just like probability trading or whatever. I would never do that. But what I will do is and look at these futures, they're really going. I mean, the market's just really moving. Amazon, by the way, is phenomenal. If anybody has the unofficial butterfly and ratio, the 3,300, 3,200, 3,300, and then the 32, 33, 34. Yeah, those are fantastic. I know those are going to pay out big, I think, at the end of the week, because that's a max value of $100. So it could be huge. But what I will do is I will look for a poor high here. I really only do this trade on poor high, poor low. And as we know, the first order of business for the poor high is to back off. And the second part is to repair. And why is this true? This is true because of what our mentor in the market profile, Mr. James Dalton, has always taught us, and that is what? That in the market, in the futures market especially, old business gets transacted first, and then new business gets transacted next. That is an important concept to understand. Just that concept sits side by side. Another thing that Dalton always said, where he says markets do one thing, they move from balance to excess and back to balance. That's also very, very important. These are like a few of the truisms that he says that are really, really important. And this one always stuck with me. Markets will take care of old business first. So think about it. When you have 100% net long overnight inventory and you have some kind of shaky structure below it, and you get a gap fill down to the prior day's RTH high, that is old business being transacted first, meaning that it is overnight buyers selling their positions for a profit before new money buyers step in once the market balances out, right? And buy for new longs, because higher prices attract buyers, which is true. They do not attract sellers. Higher prices attract buyers. Lower prices attract sellers. That's important to know. Not that you can't buy low, sell high, but just understand that that's how things work. Because when the market is constantly just grinding higher, it's actually not attracting any sort of strong sellers. It might be attracting some very unsophisticated sellers who think, oh, well, the market's high, so I'll just sell it because it's high, right? I'm not going to mention any names, but you've heard that sort of thing probably on other channels, right? Oh, we'll just sell some futures here because I don't know why, because they look high, you know? But it actually doesn't work that way at all right? So if you can remember that this old business needs to be transacted first, what you're focusing on here is that these longs have poor location. They did not get paid because there's no excess here. And that's how the poor high works. Now, last night's poor high was not any sort of big break. If you recall from the pictures that I sent you from my blotter, I put my limit orders out at 83 and then 50 cents down below, and my last cover was at 81. I put it out at 50-cent increments, and you'll note there was only a 5 lot. It was not a big trade, but the net of it was about $1,100. And as I said to you in my alerts, not bad for eating dinner with your family and not even looking at the computer and then coming to it later at 9 p.m. and having $1,100 in your pocket, right? Not bad. Could have been better, but it wasn't really the type of setup for it to be better. And why is that? Because think about it. The broader market here that brought us to this point here where the short was is not overbought. Does that make sense? It's not overbought. So you're not going to have a situation where these longs are all that nervous. These new longs. As a matter of fact, these new money longs, whomever they are, even if they have bad location, they like it. And why do they like it? Because what I told you before, I said when we were, I think I said it in the pre-market perspective on this day in the morning before this day started. I said, hey, you know, if this value area and prices can get up to the prior day's value area, and we know we had a trending day down the prior day, well, guess what? 70% of these people are now wrong. And if we get up here, all of them are wrong. Well, look at where the market went, almost. It's like 90% of these people are wrong. So there's a lot of, so even though you have some longs, maybe a bad location, because the high was poor and they didn't get paid, they were expecting that the market would shoot up. There's also a lot of short covering going on. So again, it's not surprising that the gain was very small here, but you know, that's it. So that's how it works basically. So I would do the exact same thing on a poor low. If I see the distribution end like this, and I know I've got that, I know that I've got that settlement, which, as we know, you know, looks, you know, so it kind of goes like that, and then you've got your settlement box here, right? I would buy that. Boom. I would buy that. And same thing, limit out above. Okay. Now the question that probably a lot of you are asking is, okay, but what happens on that day when it does go where everything goes Pete Tong, so to speak, right? Lupe fiasco. Well, you would kind of look at it a couple hours later. One of the things that is key to this trade is don't look at it. Don't don't look at it, because you'll just psych yourself out, because the first move here was actually higher. And some people emailed me that, like, well, you're taking some heat. The first move was higher. You are right. I don't know. It doesn't mean that it's going to sell off from the low right away. The first move could be higher. But what you're banking on is that when you wake up in the morning, you will see an overnight inventory that looks something like this one, where this is the settlement and a whole bunch of it traded down here and a whole bunch of it traded up here, as opposed to an overnight inventory that looks like this one, where it is 100% net long. This is the Sunday night gap. No big surprise, because that can happen on a Sunday. That's another thing I should also mention. I would not do this trade on a Friday. Do not attempt this on a Friday, because the futures don't trade long enough on Friday afterwards, right? They're going to shut down, and then they're going to not reopen until Sunday night at 6 p.m. So you do not want to do this trade then. You need to have the whole night at your disposal for it to fall back down. Okay? And that essentially is it in a nutshell. So anyway, back to the whole stop loss thing. Where would you put the stop? Well, in this trade, probably if I saw like overnight activity that was taking out the 91 before hitting my targets, that might lead me to believe, right? Also, if I saw overnight activity where it's like, okay, we only went like 3 ticks below the settlement and I didn't get filled on anything, and now it's here. I might set a point like further up and say, okay, you know what? This probably isn't going to work. I'll give it maybe a few points higher. But regardless of how you look at it, the bottom line is you want to be as loosey-goosey as possible with it. You really want to be loose with it. And don't forget that on some days, you will make far more than the paltry 1,100 that I made, or 5 points, whatever that was. You will make far more than that. Think about it. Like, look at this overnight range, as I was talking about. Look at this over. Let's just say that this was the overnight range on a poor high. Okay, this is at 36.60. The overnight low is at 36.40. There's 20 points here. Now, obviously, you're not going to make all of that, but I've done these trades before where I've started the first limit at 5, and then 7, and then 9, and then I got the rest out at 10 or whatever. It can happen. It's very, very easy. Think about it. The overnight trade does this all the time. So, okay. So anyway, that's something to think about. Now, one last thing I want to show you is what is key to the trade as well is where the market closes. This worked well because you are very close to the overnight high. The closer you are to the overnight high, the better. But look at this situation here. Like, here's, let me show you one. This is kind of a poor-ish high, but let's say that it's only 2 ticks of excess, 3 ticks of excess. I might do that if we close here, but look where we closed. You already backed way off. Like, you see what I'm saying? The backing away already happened. So you wouldn't do this trade. You absolutely positively would not do that. That's not the same situation. You want to close as high as possible to that area. Okay? And then, classic example of how the Sunday night thing can really hurt you, of why not to do it on Sunday night. Like, look, this is an extremely classic poor high. That's one of the best poor highs I've seen in a while. It's very poor, and the settlement is near the close. It's probably high enough to do the trade. But why would you not do the trade? Because it's Friday. You don't want to do that. And then you open up here, right? And this is Monday, Tuesday, and here we are. You don't want to do that. So, all right. Does anybody have any questions on this particular trade? Anyone? I think I pretty much covered everything about it. But if anybody has any questions on it, I'd be glad to whatever. Would I ever start a futures advisory? No. And yes, this is being recorded, so you can just go over this. You can just go over this. Somebody was asking earlier if single prints are unfinished business. I would say no. I don't think single prints are unfinished business. Single prints are an example or exhibition of where emotional buyers or sellers either triggered stop losses or panicked, or news came out and they were just like, you know, they pulled a Kramer. Buy, buy, buy. You know, they just had to have it at that moment. And sometimes that happens on the downside, you know, where there's a certain level that's very key, and below it you see single prints because everybody's stop was in the same place. Okay. Let me look at questions. Hold on, give me 1 second. All right, let me look at questions. Yeah, I don't know that you can really do this without market profile software, because you need to know how many TPOs are stretched across. You really kind of need to see that. Brian says, would this only apply to poor highs or lows? Today seems to have a decent distribution and we look to close on the high. Would today still work? Okay, so today, this is a good question. Today is actually a different type of scenario, which actually could work. And why could it work? Because you have the POC low in the distribution and you have a thin distribution at the top. And you're also near a prior resistance. So yeah, maybe today it's a different type of trade. It's not the poor high, poor low trade. But what you'd be looking at for today's trade is you'd be thinking, if we close high, I would expect that there should be at least some movement back down towards the POC, if not an entire retracement to the POC overnight. Potentially the trade is there. Potentially. Anytime that you have a very high or a very low close, and that high or low close is far away from a relatively prominent POC, I say this is relatively prominent volume POC, it's decently wide, you have a chance that prices will retrace. Now, if these futures fall down in the next half hour, because remember, you don't look at this at 4 o'clock, you look at this at 4:15. That's important. 4 o'clock doesn't mean anything. It's when the futures close at 4:15 that you want to be as close as possible to the red box. Okay, so if we were to close up here at 4:15 and this POC doesn't migrate higher, it stays where it is, yeah, I think the odds are in your favor. I would say definitely, right? And that's all you're doing, is you're trying to put odds in your favor. Okay? Yeah, there can certainly be days where there's continuation higher or lower on the poor high. Obviously, nothing in the world is going to work every single time. Obviously, you will get hurt here and there, whatever. Okay? All right, so I talked about stops. I kind of mentioned where that would be. It's not a specific stop. As I was saying, I think the best thing to do is to not watch it. Okay, best thing to do is to not watch it. Maybe give it a few hours, go take a look later, eat dinner, whatever, have a snack, come back, look at it later. Okay, I think that's the best thing. All right. You know, you could also set something where you could have an alert coming to your phone, knowing that, let's say, your first target got hit. I've done this before, where I've had a first target get hit, and then I've moved the stop to break even. So on the remaining contracts, so I make a little. Now that doesn't work as well on a day like last night when the first target was only 2 points below. But I've done this on overnight trades where it's a larger first target usually because of the way things are setting up. Like we might have been up 4 days in a row or whatever. And when I'm limiting out for $5, right, for 5 points overnight, well, I don't, even though it's only a partial position, I don't feel so bad putting a stop break even at that point. You know, and I like to have alerts sent to my phone, which just tell me when orders get hit. That's all. Okay. All right. Pete Risky is asking, is 1210 a P formation, and what does that mean? P formation just means short covering. So, you know, or that there were buyer or sellers here that kind of got themselves in trouble. Usually it means short covering. When you have letter B formation that's flipped, it means liquidation break. All right. Joe says, I joined late, but if you haven't talked about Google, are you bearish about it? Yes, it is more or less a bearish trade. And the way you know that it's a bearish trade, right, is because you know that the trade was put on for free or a small debit. Because the trade only cost 7 cents, it's a bearish trade, right? I'm not going to put on a trade to collect to pay 7 cents. So, you know, to me, the 7 cents is kind of the same thing like as if it was zero, basically, right? Anything like minus 15 to plus 15, that's just like the cost of doing business. All right. Flyboy says, Dalton always stresses that he will never hold an overnight trade without a hedge. Do you do that, or are you just looking for a fast trade? I was just looking for a fast trade. Dalton actually trades futures a bit different from me. Those of you who have taken his courses at one point know that he does a lot of these hedged trades. I know what he does. It's just not my style. I don't do it. But I know that he does some hedged trades. But no, I don't do that. And you place the trade at 414. Yes, even later, like as close to 415 as possible. And it is not okay to place the trade at 6. Absolutely not. The trade is at 415 with like 414 with 10 seconds to go. 414, 50, whatever. When there's just a few seconds left, you smack it at market right there. Okay, as late as possible, up to the 415 settlement is when you do it. Okay. Night Trader says, if you're exiting the poor high, would you target where the profile starts to get fat again? Yes, exactly. Such as today's trade would be that type of trade. Like, let's say that you did the trade today, right? Where would you be targeting? Where, again, just like it was said, where the profile gets fat again is where you would expect that prices would be pulled to. That's just how things work. Okay. But you can see now that we're coming off of it at 98, the lower we go, the less attractive this is. I probably wouldn't do this trade here. I would need futures to be here in order for me to be interested in this sort of thing. Okay? Larry D says, what's the strategy with the Apple trade? The strategy for now is to hold, because the 137 calls are draining like crazy, and now we have intrinsic value in our 125s. The stock is already $3 in the money. So because I'm kind of bullish till the end of the year and we have a whole nother week of expiry, right? This trade actually has plenty of time left. It doesn't really make sense now, given the pattern, to be doing anything with it. So we're going to be holding it. All right. Gab, I already answered that question. Why so close to the close? You have to go back and listen to the recording. I explained that in detail already. Okay. DVD says, can you explain the Google unbalanced butterfly 132 and have you considered the strikes? Well, it's just so okay. So this is a good question about how to do 1, 2 instead and do 1, 3, 2 instead. So the important thing to note is, notice how I drew the picture. If you're gonna mimic a trade and use 1, 3, 2 instead of 1, 2, okay? Make sure that your long strike is the same as mine and your short strike is the same as mine. And then this you can put wherever you want. All right, be aware of that. That's important in order to keep with the spirit of the trade. And like I said in my alert, I said 1, 3, 2s are okay, but then I said but, and I emphasize that the but is in capitals. You will have a different risk profile. If Google crashes tomorrow and you will have a 1, 3, 2, these two trades will react very differently. First of all, understand that your 2 doesn't mean squat. This is not going to do anything for you. The fact is you're going to be short 3 and I'm only going to be short 2. So my trade is probably going to expand and look great, and you're going to take heat. Your trade is going to look not so good because your threes here are going to blow up and you've got an extra one and it's just different. That's all. So just be aware of that you have very different risk profile on the 132. All right. DJ says, would you suggest a put vertical instead of a ratio in Google with a higher volume? No, absolutely not. I would not lay out any debit on that trade. I would not lay out any debit at all on that trade. I don't think so. Yeah, bonsai, same thing here. I have the same trade, not too large on the 3200, 3300. I have that same trade on. It's looking fantastic. I haven't sold any yet. Maybe I probably should have gotten out of some today, but I don't know. It just feels to me like Amazon is just starting to move, so I'm just going to leave it alone. So I don't think it's necessary really to, you know, it's a big green candle and we did almost clear the resistance, right? What was it? 3248.95 and today's high is 3247. So it's no surprise that we backed off right on that. But with the big green candle closing close to that resistance, my thought process is leave it, you know, just leave it. And like I said, if we go to mid strike, notice that the downtrend line is here at 34, right? Mid strike is 33, but there's such little time left. And because this is 100 wide, you're going to have a huge expansion of it if you can, even if you're at the mid strike. Remember, the trade is 32 to 33. It's 100 wide, and this is your 34 here. So it starts to lose over 34. But because time is so short, even if you drill through the mid strikes, you're going to see that the butterfly is going to sell for a huge profit. If this was the case with a week to go or 10 days to go or some long period of time, that wouldn't be the case. It would be a very dangerous trade to do. But with short duration, it's a good trade to do. Okay. Well, Boston, what was the reason for, I just talked about it. The reason was that it's a speculative trade looking in that direction, right? Any butterfly that is a debit is obviously directional, and any butterfly that is really wide is obviously directional. You don't do like huge wide butterflies for credits or whatever, right? Narrow butterflies that are BWBs collect credit. Okay. Matt already commented on the Apple trade. There's no change to that. No change whatsoever. All right. Let me see time spreads. Anybody ask any questions? If anybody has any questions in time spreads, you can put them in there and I will put it in here. Somebody in time spread said they've caused global warming with some of their trades. I think they might mean heat, you know, which is pretty funny, Lydia. I like that. She says, heat, I've caused global warming with some of my trades. That's fantastic. That is very funny. And then somebody in time spreads, Jimmy Mack says micros. And yes, that's also the same thing as far as the futures trade. That's a very, very good way to approximate it. Remember, you can use the micro futures as opposed to the regular, which is a lot less risk. Obviously, they pay out less because they are less per tick. I don't remember the exact stats on them, but you can look it up. But you can use that. And that's /MES. Instead of just /ES, you can go /MES, and you have micro E-minis. Right, 1/10, right? Exactly. So that's kind of a big help. All right, exactly. Instead of being $50 a point, all right, it's far less. Right. So for those, I'm just saying, for those of you who are new and you want to try something like that, like maybe you want to try an overnight trade or something, you haven't never traded futures before, you don't want to take on a lot of risk, look into the MES ones. Okay. All right. Raj says, if I have a 3180 call in the money, what's the best way to hedge against it? You know what I would do, Raj? If I was in your situation and I had a 3180 call and I wanted to take some money off the table, honestly, you know what I would do? I would sell something with small duration Friday. like somewhere in here, something that still has a decent amount of credit. Don't sell something cheap, like too high, like make it worth your while. Sell something like in the 33, I mean, you're at 31.85, so you're in great shape. So you could literally sell like a 32.80 for $12 and have $100 wide spread at that point, and you'll be taking in $12, which is fantastic. All right. Yeah, Trip is saying, is Tesla too volatile to take in credit after that drop today? I don't know what it's doing here. I'm just a little, I just thought it made sense to me to close out that trade, so we did. I don't know. It just made sense to me to get rid of it and just reload another time. I was looking at the butterfly for next week at the 510, 500, 480, and the credit is not as large. I think I was working the same 60 cents for a while, and I didn't get any fill on it. So we'll keep watching it. I mean, if it comes into like a pullback point that seems legitimate, it might be worthwhile. Okay. And like when you see, look at how futures are coming in now. So again, that overnight trade is not viable. You don't want this settlement to be here. This is not good. This is just not good. You need it to be up here in the skinny part and then come down to the POC. So just keep that in mind. This is not a good day to do that type of trade. Okay. SG says, what about a Tesla 600, 560, 520 butterfly for this week? So that's a straight butterfly. Also selling 700 calls to finance the butterfly debit. That's okay, SG, but I'm not really bearish on Tesla. Like, that's not the direction I think it's going. I'm just a little bit worried that it might go in that direction, but I'm not like bearish on it. Personally, I think it could easily just go sideways for a bit. Futures are coming off a bit into the close, just so you guys know. So notice that, we're probably going to be somewhere near the POC, right? These high volume areas are acting as a magnet for prices. And again, we'll see where we are at 415, but, not the greatest close. So. Ohas, you can just stay here. This is the best way. This is the best way to learn more about it, is just to stay here. That's why I purposely made an effort to keep the advisories very reasonable in terms of cost. I don't want to be charging people, $200 a month. You could learn that way. I'd rather have, more people and have people stay on and enjoy the trades. So I think, I think just stay here. That's it. Monkey bars, I don't have a lot of experience with, but Scott has more experience with it than me, and I think he's got some stuff on it. So you may want to shoot an email over to Scott. He knows more about the monkey bars setup than me. It is an approximation of it, but not as good as what Window Trader shows. All right. Okay. Also on the showing of the profile, I probably won't do this every day. I really just put it there today because I was, it was the Fed and I wanted to see how we traded in relation to the Fed, but it's not something that I would share like every day. Mostly just out of courtesy to people who pay for it. It's not cheap, and that's really just it. It's not that I feel that I'm cheating myself, but I just, I have a deal with Window Trader, and, it's obviously a very elegant piece of software that's not free. So I don't really want to be broadcasting it in our, in our room like that, like all the time. Marin, I can't make a cumulative tick for TradingView because I don't have anybody on staff who knows whatever their trading language is. Okay. JC says, what data service do you use for Window Trader? I use eSignal. And so the charts that you sometimes see me send, which are the charts with the white background with the green and red candles, that's eSignal, which is just a charting package. I do not recommend that, by the way, because it's very expensive. and I don't think it's worth it. I'm just used to it. I've just been using it for 15 years or whatever. eSignal is one of the few data providers that allows you to connect it to WindowTrader. WindowTrader really only accepts like 3 different data providers, that being Bar Chart, WindowTrader, and one other one. We also have a Bar Chart subscription in our Bar Chart subscription in our office here. Brad has Bar Chart connected to it, and it's just fine. The data is the same. The data provider doesn't really matter. I think that Bar Chart is the cheapest. Yeah, IQ Feed, I guess, is the third one. So, you know, that's that. Oh yeah, Mac, this is a question. I don't know if you're the same person who emailed, but asking Microsoft today, why did you put a vertical instead of a butterfly pinning 225 resistance or a ratio? I just want to learn. Thank you in advance. Just because I like the breakout a lot on the, I like the breakout a lot on Microsoft, and I thought it could go. And when you have a strong breakout like that, I just, you know, you get what you pay for. And notice that the way I modeled the trade, those puts were still trading for 50 cents at the time. So you could, if you can finance a vertical with puts, it's far better to finance a vertical than a butterfly, because the vertical is going to perform so much better, and you're going to make much more. You're going to make easier money and more money. So that's the way I was looking at it. All right. Thoughts on gold after the FOMC announcement and pending COVID-19? I don't have any thoughts on what COVID-19 will or won't do for gold. As far as the Fed is concerned, it seems to like it. The Fed is obviously signaling that it's lower for longer. Notice the DXY went down again. So gold just looks fine here. And, you know, we're going to have to start selling calls again. And we might be able to be more aggressive with the puts now, because maybe gold is telegraphing that it wants to kind of climb higher. But the calls are going to have to be higher up. So tomorrow I will probably rinse, repeat on the calls, and maybe a half position on the puts, like under the 200 here, maybe at 169. You know, the puts are just getting harder as we go up. It's all difficult because it's all very, very low implied volatility. So it's not easy. All right. Okay, I'm going to wrap it up there. You guys have a wonderful evening. Where are futures now? 94. So look, we've actually dropped a bit further. We're at 94 now. And again, we'll see. Yeah, that's actually where the equities closed. Equities closed at 94, and we're trading 93.75 now. So again, just to recap, not an overnight trade, because you're not close enough here. You're too close to the POC. All right, you guys have a wonderful evening. You can always email me at asktheshadow@shadowtrader.net.